Hello, good evening, everyone. We'll be starting the class anytime soon, but for the purpose of those who are here to join us, I would like us to just exercise a little more patience. Maybe like in the next 5 minutes, we're just going to kickstart the class. All right. Please, can you hear me from there? All right. All right, thank you. Let's just give those who are here to join us just 5 minutes, and then we'll kickstart the class. All right, guys. I think it's time for us to start today's class. Good evening, everyone. Once again, my name is Paul. My name is Paul Akman. I'll be your host for today. Today we'll be talking about fundamental analysis. Today is the module 3 of the classic financial trading program, and we'll be dealing on fundamental analysis. You know, in trading, there are different ways you can analyze the markets. One of the ways is fundamental analysis, through fundamental analysis. Another way is by technical analysis, you understand? And then you can analyze the markets sentimentally as well. But today we are going to be participating, or we are going to be concentrating on fundamental analysis. What is fundamental analysis? Fundamental analysis is the process of breaking down the impact of political, economical, and social factors on the relative value of financial instruments. For example, on the chart, Market participants can identify the primary drivers of a currency pair's intrinsic value using macroeconomic and political implications of an economy. After identification, a trader can craft an informed trade setup on charts using his knowledge. Now, first of all, let me let you know that financial analysis is also known as news. You can refer it to be news. So when you hear somebody say, oh, a news is coming up, just know that news is also fundamental. Okay. Fundamental analysis is a process of breaking down the impacts of political, economic, and social factors. This market is actually controlled by majorly, political, economic, and social factors, and also the demand and supply of, goods and services. Actually, if you want to actually enter this market and know much about this market, you have to be very much familiar with fundamental analysis. Excuse me, I'm with you. So what are the components that makes up fundamental analysis? The components that makes up fundamental analysis. When you're talking about fundamental, like we mentioned earlier in the previous slide, you're looking at the government and politics rather. You're looking at the microeconomics, macroeconomics, environmental conditions. These are four major things that actually, makes up the components of fundamental analysis. Which means that when you're talking about fundamental analysis, all of these things encompasses the direction or the analysis of the market fundamentally. All right. So when you talk of market sentiments is a direct result of micro and macroeconomic factors, as well as government and political factors. Let me take, for example, the last incident that happened in Nigeria, the cash shortage and no cash issue we had in Nigeria, this is one example of, political, influence or results. And things like that are things that controls the markets. When things like that happened, you will agree with me, a lot of things were affected. Things like, transportation was affected. Things like, the cost of goods and services were actually affected because prices were actually, skyrocketing, because people could not actually go to the market and get a lot of things they should have originally gotten, because they had limited cash flow. So policies like that and decisions like that by governments as a result of political reasons can actually affect the market. And then when you talk about micro, it was micro because this thing affected majorly, Nigerians. Okay, it affected majorly Nigerians. So it was a microeconomic problem, sort of. Now, when you talk about macro is those, those decisions or those things that affect both internal and external, external aspect of the country. Now, there are decisions that are made here in Nigeria. Okay, for example, there are decisions that are made here in Nigeria that it affects both the Nigerians and even outsiders. Okay, for example, presently we know that Nigeria currency is presently doing badly. All right, that is as a result of poor economic factor or poor economic growth. Okay, this is not just affecting us here, it's affecting some things outside the country. Now I want to move on fastly to market sentiment. When these things happen like this, people that are into businesses, okay, suppliers, manufacturers, and traders, okay, they react to things, political decisions made by governments, made by controllers of the markets, okay, made by the heads of some institutions that actually controls major factors of the country, okay, just like that of the CBN governor who came out and made a directive, and it stood. Now, when things like that happens, people or traders or investors react to directives, and they react to it sentimentally. I'll go ahead and give you another example. What market sentiments, means. For example, if today you hear that, or you heard a grapevine or rumor that there's going to be scarcity of fuel. Maybe you went to get fuel at the filling station, and then the fuel attendant told you that from next week from Monday there's going to be scarcity of fuel. If you are a bus driver, one of the first action you may think of taking will be for you to go and store fuel. Buy as much quantity as possible and store it as against Monday or Tuesday, at least to make up to take you for maybe 2-3 days before you see what is going on. And then you go around and you tell somebody, I heard fuel will be scarce by next week, Monday, and the rest of it. The person to goes, reacts, and then goes to buy that fuel and keep and everything. People keep hearing all those rumors. How grapevine or rumor spreads, okay? This reaction, remember, this thing has not happened yet. It is just a rumor. And the reaction of people going to the market, buying this fuel, storing this fuel, it is called market sentiments. People are just reacting to that, to the market sentimentally, okay, because it actually hasn't even happened yet, but they are just reacting to it in case it happens. Now, the fact that that Nigeria is one country that anytime you hear fuel is going to get scarce, so before you know, fuel is scarce. So people just look at it, truthfully, when they say this thing, mostly it happens. Do you understand? It happens. So people react to it, and they are always proactive and try to play safe. So this process of reacting to this thing is called market sentiment, okay? And when this thing perhaps eventually happens, all right, and then the fuel became scarce and everything, when fuel gets scarce, what happens to the price of fuel? Price of fuel increases. It becomes scarce, and it increases. The prices of fuel and other things, transportation and other things, increases. What led to the prices of fuel increasing and prices of transportation increases is because there's scarcity of fuel. So that is how demand and supply also have a role to play in the market. Right now, Russia is presently in a war with Ukraine. And we all know that Russia is one of the most, is the largest, oil producing nation, okay? Before now, we used to have about over 1 million barrels of oil produced, and produced and supplied, by OPEC. But since Russia started fighting war with Ukraine, because of the sanction that has been laid upon Russia by a lot of countries not wanting to do business with them and everything and associate with them. That has actually limited Russia from supplying a lot of barrel compared to what they used to supply before. Do you understand? Now, that alone has cut down the quota or barrel that used to be supplied by OPEC generally, because their major player in the market does not supply or produce and supply, as though they used to before. So how has that affected the market? It has made the price of fuel, always on the high. Do you understand? always on the high. And then people are looking for fuel to buy because the barrel of oil that used to be supplied are no more supplied as though. So supply and demand has a way of affecting the market, just like I just explained now. So market sentiment is a direct result of micro and macroeconomic factors, as well as government and political factors. Most times on the chart, price moves as a result of demand and supply caused by market. We just talked about that. How to analyze fundamentals. When conducting fundamental analysis in the market, keep an economic calendar on hand that lists the indicators and when they are due to be released. Also, keep an eye on the future. Often markets will move in anticipation of a certain indicator or reports due to released at a later time. Now, there's what we call calendar. There's what we call economic calendar. If you are familiar with your forex factory, that is one of the economic calendar we have. Okay, that actually tells us when, and where a particular news is coming out from, the zone is coming out from, how it's going to affect that zone, the currency is going to affect, and the time the news is actually coming out. All right, as you can see on the chart here, news like things like interest rates, gross domestic product, consumer price index, unemployment/employment rate, product price index. These are things that actually moves the market. Some of the things that moves the market. And when there are news like this, it pushes the market to be very volatile. It makes the market very, very volatile. Do you get? And when the market is volatile, okay, especially on current market, most times it gives strength to economy. And when economy is strong, okay, there's people come to invest. Okay, because when economy is strong, the currency of such an economy is also strong. So a strong economy leads to investors coming into the economy to do business. And when people come into an economy or a country to do business, the currency of that economy is strong because it gives value to that economy. All right. So also when an economy is weak, people go out instead of coming in to do business. They go out of that country. They go out to do business. And when they go out to do business, instead of people patronizing that economy, that country's currency, they go out to patronize other country economy. Nigeria is one of the examples I keep using. All right. Even if you don't get to find them in the financial global market as often, in fact, they are not even there. And that's because of the weak economy we have. All right. Because our currency consistently depreciates. All right. Now, a lot of Nigerians are out there traveling to different countries, going to work, taking their skills out of this country to that place. You understand? When people goes to other country, it boosts that country because when they go there, they deposit their skills, they deposit their talent, they deposit their everything, and then they work and get paid, and then from there they get taxes. And the country get taxes, and then it strengthens the economy. A strong economy, like we said earlier, brings about strong currencies. Okay, so when conducting fundamental analysis in the market, keep an eye on economic calendar. We said that earlier, and then that leads to indicators. Okay, strong and weak economy. All right, sustainable development require that across generations, there should be no decline in the possibility of total capital to generate flow of services. Weak economy. One of the things that you see in some weak economies, in most weak economies, is like marginalized orientation, import labor, import goods and services, borrow money, cut back on spendings, corporate social responsibility. Nigeria today is owing a lot of money. They are owing a lot of money. Sectors that are supposed to pay today are so strike tomorrow. They keep cutting costs, cutting spending on important places that they're supposed to even put them on because they don't have enough money. Okay, you see a lot of people, a lot of things we are supposed to produce here, we import them out, import them into the country. All right. And then strong economy brings about produce, labor, a country like Russia, China, USA, you see them, most of the things that makes them one of the largest countries because they do more of their production themselves. They don't get to bring in people's, products. They produce their things and they sell their things. People even come to patronize them. Okay, as by so doing, you spend their money because most times you have to buy with their currency. Okay, they produce goods and services. They are the one that even lend money. And Nigeria has learned so much from borrowed so much from China, in the recent times. Okay, so that is one of the things you see in a strong economy. So when you are trading, when you are taking trades, you look at those countries that consistently try to improve their countries or their economy. Okay, these are the countries that people look at and know, even if their currency is weak today, tomorrow they are going to do things to, boost the value of their country, of their currency. Key economic indices. The following economic indices can affect price positively or negatively on charts. Okay. Growth, GDP, retail sales, manufacturing production, durable goods, other trade balance, current accounts. Growth can affect, an economy positively or negatively. Inflation can affect a country positively, negatively. Central bank, their monetary policies, meetings, conferences, interest rate increase, and the rest of it. Employment, these are things actually that, you are supposed to check week in, week out on a monthly basis, okay? Because these are things that actually affect economy. And when news on this aspect, on these particular things comes out, people take advantage of it and, capitalize on it. Check their weekly or monthly reports on growth, GDP, retails, inflation, monetary policies, non-farm payroll, and the rest of it. Note the previous reports, forecast reports, actual reports, analyze their effect on currency, commodity, indices, use analysis to decide if you should trade or not. All right. We'll be talking more on this particular forest factory where you can check the news and data released from different countries or different zone, okay, that has to do with all of this aspect of the economy. All right, so when you check in there, these are the things you find there: the previous reports, the forecast reports, the actual reports, and you can analyze them, based on the currency, commodity, and indices, or based on the effect on the currency, commodity, and indices. So key political indices: politics, conflicts, wars are government ways of running the world. These events indirectly affect price movement on the chart. We talked about something like this earlier, using Russia, as an example. We also cited Nigeria as an example, you understand, conflicts where you see war. Liberia is one of the oil producing nation we know that also belongs to OPEC. Okay, sometime last year, a lot of conflict, crisis was really going on there, and then that's actually reduced the quota that was actually produced and supplied, to OPEC. So things like this are things that actually that affect, economic, that runs the world. So they say, watch out for key political events. Watch out for elections period, election results, peace, conflicts, war. So when you are trading, these are some of the things you look out for, things that happens that actually create volatility in the market, things that happen that actually people react to, economics reacts to. If there is war, a lot of businesses will shut down. And when a lot of businesses shut down, definitely the economy of that country will definitely not be doing, that economy will not be doing well. Definitely. All right. So things like this are what affects the economy of a country. And then people try to leverage on it and take advantage of it. So when you analyze conflict between major countries, war, sanctions, You use analysis to decide if you should trade or not. So economic and political news channels, to follow global events live, and these are places you can actually follow and read from what is going on globally. Basically you can see things like this. Even Arise TV shows things like this, and then people learn from it. All right, so let's move on. Economic calendar. This is Forex Factory. For those who don't know what Forex Factory is, if you've not been using your Forex Factory, you need to get close to your Forex Factory. You need to know, you don't want to make money in the market without Forex Factory. This is like your timetable. When you want to write exam, you look at it. Oh, this is the time I want to write this exam. This is the paper I'm writing. So Forex Factory is key. So a simplified view of the website is now shown, where you can focus on its key components of actual, forecast, and previous reports of each fundamental news. Remember, we talked about a place where you can get this thing, So looking at this thing, the key factors are details, actual report, forecast reports, previous reports. Now you will see on the screen there is what we call actual, forecast, previous. Now, like the name, like it sounds, like it stated, previous. Every month, economics develop economic that wants to improve on the economy consistently. Okay, review the economy monthly. All right, so they give data that they can use to either work on the economy. If the data is positive and is meant to be negative, they know what to do. If it's negative and it's meant to be positive, they know what to do. And this is as a result of getting feedback on the economic data and knowing how to improve on the economy. Countries like Nigeria don't keep data. We don't have statistics. But you can't go to a country like US. Everything is archived. Everything is based on data. Everything is based on statistics. Because why? It is only data and statistics they can use to know how far they've come, how well they've come, and how much they want to improve on the economy. So every month you see all of this data, release. So when this data release, okay, for the one that is meant to be positive, okay, like for example, look at this data now. Previous is 38. And forecast, which is what investors or economists, okay, are forecasting that will actually happen, okay, this present month. So for example, last month, let's take this instrument, USD dominated trade balance. Last month, it was 38.7 billion. Now, economists are forecasting that this month is going to be 48.8 billion. Now, what actually happened? Actual is what the result, when you forecast, you are anticipating, you are guessing, okay, based on the idea, putting different data or technical reasons and the rest, putting them together, you are forecasting that, oh, this is what may likely happen, okay? But that is not the actual thing, because you are yet to even see the actual results. So when the actual result came out, this was what came out, 46.8 billion, okay? And this actual came out, and when you see something like green under the actual, all right, that signifies that news was positive and it was good. The outcome was good. All right. So this green shows that this news was actually good, and which shows that 46.8 billion was quite bigger than or higher than 45.8 billion. So it tells that particular news came out, or that data came out positive for the US. So another example is the second one. You see the same thing apply here. All right. So when you see actual, forecast, previous, it just tells you what to watch out for when a news comes out. When a news comes out, the first thing you want to look out for is these particular details. Where is the news coming out from? What is the detail of the news? When you click this box, this orange box under the detail, it will open up what the news is all about. Then you can read clearly in details what the news is all about. And then you will now be expecting to see with the forecast or with the actual result of that news, excuse me, will the actual result of that news be higher or greater than the previous, or the forecast rather? Still part of economic calendar. So currency is focus. Currency in focus is the underlying currency of originating country where the news is being released. It is expected that the news will directly or indirectly affect currency. Click on details folder to read details of the news. Like I said earlier, you click on the folder. The folder is where is under the detail, you see the folder. That is where the detail of the news is. Now, this arrow or this box or this arrow is showing you the country where the news is coming out from. So the country is coming out from Canada, right? And you see the news is employment change. Now the impact of the news is this, the red. When you see a red color on any of these icons or any of these boxes, okay, it shows that the news is an high impact news, is a high impact news. All right, now you look at the details, you look at the forecast, look at the actual, look at the forecast, look at the previous. Remember, when you click the details of this news, it will tell you if the actual is greater than forecast, if it will be good for the currency or not. There are news that when the actual is greater than the forecast, they are actually good for the currencies. There are news that when the actual is lesser than the currency, okay, that the forecast rather is actually good for the currency. So you need to open the detail, click on this red, orange box to read more about that news. CAD, that's the zone that the news is coming from. Look at USD, that's the zone. You know that this news is going to be affecting the US, and whatever instrument is paired against, you know, the US is actually going to be affected, or the USD is actually going to be affected. Buy currency in focus, you know, sell currency in focus. When you see, you know, the actual greater than, you know, the forecast as it is here, what do? You buy, you know, any instrument that is attached to this particular currency. All right, you buy the pair currency. All right, now when you see the actual less than the forecast, you see it in a danger color, a red color like this, which shows, you know, negative. All right, and then it tells you that it is actually bad for the currency. And what do you do to a pair currency? You sell. You sell. Keynotes before placing a trade on the chart. You're expected to be able to accurately read and interpret data report in order to place a trade. In order to place a trade, buy or sell on the charts. Now, we talked about opening that orange box and read about this, and then you get to know if the news is good for the currency or not by looking at the actual as against the forecast. You get? So you'll be able to interpret, and then you can read more. Let me take you back. You can read more. Look at this place. Look at this place where you can see the news slash the latest stories, you know, like that. You can open that place and read more news about the outcome of that, news. Do you get? About the outcome of that news? Where my mouse is, okay, you can, where my my mouse is here, you can, my cursor is, okay, you can actually read more about it, okay, because sometimes you get to see news that are not actually based on statistics and data. They are just speech. All right, they are statements. All right, you get to open that place, the news, and read the press release to know if the market is going to be positive or not. Just say, let me quickly throw that in for you. So you're expected to be able to accurately read and interpret data reports in order to place a trade or buy or sell on the chart. Of course, that's what we just talked about. Focus on high impact news with red. So focus on high impact news, okay? On high impact news. Focus on high impact news with red folders for best traders. I told you about that. Any place you see the red folder, that is a high impact news. That is a news that a lot of traders are actually or are always aiming at. It makes market very volatile. It pushes market very fast, and it makes trading very profitable for people. Volatility is dependent on other economic conditions. All right, that actual is greater than forecasted reports may not positively impact on the currency if there are some other underlying political sanction conflict from the country. All right, sometimes you get to see an expected outcome which is like actual is greater than forecast, and when the actual becomes greater than forecast and is green, you'll be expecting the currency to buy, and then the related paired currency to sell. But don't forget, there are other factors that affect or that controls the market. Let me quickly give you an instance. Today, we are expecting that, or yesterday rather, we are expecting that the US was going to increase interest rate by 25 basic points. At the same time, we were also expecting that, okay, Apple was going to declare, their quarterly earning that yesterday. Now, we know the relationship. For those who don't know, there's a relationship between USD and indices, which is also stock. Now, which means that because indices is traded, with USD or US dollar, most times when dollar is weak, it gives boost to indices. When dollar is strong, it gives weakness to indices, because when dollar is strong, people go to sell their stock and get their cash and hold on to the cash. And when dollar is weak, people get to use their cash and buy stock and keep their stock. So those two instruments have a relationship. So coming down to what we are talking about, yesterday we were expecting that US was going to increase interest rates. As a result of that, it was going to give boost or more value to their currency. At the same time, here comes the news we're expecting from the stock market, which is the Apple, the largest stock market company in the world. One of the largest, as the case may be. Now, what happened yesterday? US declared a statement that there is a possible interest. In fact, they increased their interest rate, but although not up to 25 basic points, but at the same time, sentiment was running through the market because people were expecting a profit, declaration from Apple. Now, because US actually increased interest rates, what do you expect? You expect that, and they actually increased interest rates. You expect that currency was going to gain strength, right? And US dollar or a instrument like US indices, another instrument paired with US, we're going to buy. But unfortunately, you saw US selling. That's because another factor affected this. And one of the factors that affected it was also the banking issues that has been happening in the US sector, in the financial sector of the US. So this brings us to the fact that there are times that you may see actual is great. If actual is greater than forecast, is good for currency. And a lot of people, when they see actual is greater than forecast, you quickly rush, blah, 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 and go and buy USIDX. You quickly rush and go and buy Euro USD. You quickly rush and go and buy, or you sell Euro USD. Quickly rush and buy USD JPY. But note, why doing that? Before you make that decision, also look at the fact that US instrument is not standing alone, is a paired instrument. Therefore, there's a currency that is also paired, with the other currency. If US is strong, you need to also take a step and check, is Euro doing well as well or not? By so doing, you will know if there are other factors that is actually affecting that instrument at that point. All right. So trade at the exact moment the news is being released. most times volatility don't last long in the market. All right, this is actually relative, because there are some news that actually, when the market comes, when after the volatility it picks up, that's when it even picks up more. All right, so there are some news that you need to be familiar with the market to know the type of news that just the volatility just spike up once and never returns back. There are also some volatility that when it spikes it falls, and then you can take advantage of it. All right, you can use technical analysis knowledge to define your risk reward. All right, technical analysis, that is what I just talked about now, looking at the previous times. In previous times, how has this news actually react? What was the sequence this particular news took? Was it just pum once, or did it go up and then started coming down gradually? So when you analyze that, you'll be able to know how the risks you want to take in that particular news when it comes out. Once you notice volatility is over, close your trade and move. Well, I can say this for sure is relative, because like I said, there's some volatility. After that volatility, okay, after volatility, some people still trade technically. All right, so some people don't even trade the news, some people trade technical. So for those that trade the news, this is for you. Once you notice volatility is over, close your trade and move on. Strategy for trading fundamental analysis. There are three principal fundamental strategies to use in trading currencies: pre-news release, at the news release, post-news release. Before the news is out, a lot of people react to sentiments. For example, okay, pre-news release, take a pending position 5 minutes before the release of the data, buy stop and sell stop. There's what we call buy stop and sell stop. It's under your pending order. You need to learn how to take a pending order trade. If you don't know how to take a pending order trade, go to class, join the beginners class on Monday, or the technical aspect of it. They will teach you how to take pending order. You can meet your account manager. He can teach you that. So you take a pending order. Pending order is you setting your trade both on a buy and on a sell position, so that when that volatility pushes up for a buy position, it will trigger your trade. And when it triggers your trade, of course, there is a take profit there. It takes your profit at that price that you set to take profit. Also, sell stop is still when the market comes down, because market is a two-way thing, it's a two-way sword, and then you don't know if it's going to come down or it's going to go down up, because you don't know what the result of the market will be. The result of that news will be. So the news may come out and it favors a buy, it may favor a sell. So what you just do, you set that pending order both on buy and a sell. In case it favors a buy, it triggers your market and take your profit. If it favors a sell, it triggers the sell and take your profit. All right. At the news release, you pay attention to pay attention to market's reaction to the news. Negative deviation from estimates should send related currencies down, and positive deviation news up. I thought about the relationship between dollar and indices, Euro USD, USD JPY, like that. All right. So if the news comes out positive for one currency, it will definitely push the other currency down. All right. So pay attention to the news. As soon as the news comes out, you see the news, the data, or the release, or the result of the news. You'll be able to determine if you are buying or if you are selling a particular instrument. Post news release, the market usually retraces 10 minutes to 30 minutes after the release. Wait for the market to retrace 10 to 20 pips from the level attained based on the news, and take a trade in the direction of the market based on the news that's coming out. Markets retraces 10 to 30 minutes. Some may not retrace, some may just be a one sided news, some retraces. All right, important news. We will now look at some fundamental news on economic calendar influencing price of instruments in the global financial market. Some of the news are consumer price index, CPI, official bank rates, gross domestic product, GDP, press statements, bank heads, producer price index, manufacturing PMI, let's just look at the ones we can. Consumer price index, published monthly. The consumer price index is the timely indicator of inflation. It measures the cost of goods and services and gives us an objective handle on how fast prices are rising or falling. When CPI within targets or forecast, when CPI is within target or forecast level, it is considered normal or even desirable. CPI affects monetary policy decisions directly. Hence, its reports has a significant impact on prices. Look at the chart here. This is CPI, is a high impact news. CPI on Canada. CPI actually comes out on every economy because it actually measures, consumer price index. It measures the level of if consumers are actually spending so much, on buying things or not. Here is a calendar showing CPI data released for Canada on a particular data. Take note of the previous forecast and the actual. Can you see the actual results beat forecast by a wide range? This shows the CPI data is good, thus a healthy Canadian economy. You can then place a buy trade on Canadian dollar. You will place a buy, place buy trade, buy order on pairs such as CAD JPY, CAD CHS, and then sell order on pairs such as USD CAD, and the rest of it, So that's an example of, how you check a result. Look at the card, look at this card CPI monthly. The expected result was 0.1%, but what came out 0.5 by 0.4 difference. All right. So this gave a boost to Canadian economy. Another news we look out for is, official bank rates. Central banks around the world, and especially of the major economics, such as Federal Reserve, ECB, Bank of Canada, Bank of England, Bank of Japan, like that. They release minutes of meetings deciding on bank rates from time to time, like we said, like I made mention yesterday that US were trying to increase, we're hoping that they will increase, their interest rate by 25 basis points because increment in interest rate give boost to currencies. And, when economy is good, currency becomes good. And when currency is good, it shows that economy is good, okay? That alone gives boost to, economy, okay? Official bank rate is one of the news you look out for. Gross domestic product is one of the news you look out for, okay? All of these things, when you see a news like this and you click on this orange box, it will open and you read more about that news, what that news does, the time it comes out, and then you can now check the forecast, the previous. The forecast is what you're expecting, and then the actual thing, the actual data that will come out will now determine your next move, if you are buying or you are selling a particular currency. Press statements, just like I said earlier, when Federal Reserve chairman wants to talk, when the CBN president wants to speak, when the governor wants to speak, all those type of speeches or release, you cannot quantify them. They are not data, they are not, they are not statistics. So they are just speech, okay? So you can actually get to know they said press release such as FOMC meetings, Federal Reserve chairman speech, ECB and the rest of it, are important fundamental events that can sway prices of an instrument such as a currency pair. This is because such statements usually borders monetary policy. You can take advantage of such press release and study their content before taking a major trade decision. It is important that a trader studies the personality of whoever presides over central banks of the major economics and be able to distinguish a dovish state. Now, that was where I was heading to. There are some people that are majorly concerned about, developing the economy. They don't care about how the people are going to fare. They just want to see that the economy is constantly being developed. As a result of that, those people, they refer to them as, hawkish people. Whenever they speak, people expect hawkish statement for them. Hawkish means a statement that would develop the country, that would develop the economy. And when an economy is developed, what happens? The reaction or the effect is that the currency of the economy will be boosted or gain value. And when currency of that economy gains value, what happens to that economy? What happens as a trader? You buy the particular instrument because it has given push to that instrument. The instrument will always buy because the economy is strong, because the currency is strong. Okay, so when yet they say, that man, Federal Reserve chairman is a hawkish man, it means that most times his focus is always on the economy. He doesn't care about the people. He doesn't care about his economy. If like he increase interest rate, people will not be able to borrow well because the interest rate is high. Okay, so that is him. He just wants to stabilize the economy. So you get to know if his speech is focused towards, improving the economy. By so doing, you'll be able to know, that means this man's speech is going to give boost to the currency, and that is called a hawkish speech. And when it's against the improvement of the economy, it is called the dovish speech. A dovish speech. Another important news you get to see is producer price index is measured. Survey showing change in the price of finished goods and services sold by producer. If producer keeps increasing the cost of or the price of goods and services, it shows that yes, the country itself is not giving the producers, a conducive environment for them to produce at a cheaper rate. That one of the things could be maybe increment in, interest rates. Another one could be maybe there's a war, like now that Russia is fighting war, the people that are managing to produce to import, to import or to export oil from Russia, they are managing to do that. What does that mean? It means that the little they can import, it will be expensive. Service PMI, survey of purchasing managers in the service industry, which asks respondents to rate the relative level of business conditions, including employment, production, new order, prices, supplies, deliveries, and inventories. Manufacturing PMI, these are news that actually you look out for, that are very key. The news that moves market. Majorly, news like this are always high impact news. And when you see a high impact news, you see the boxes on red. Okay, crude oil inventory. This one is published weekly. Okay, this Energy Information Administration report measures the change in the number of barrels of crude oil held in inventory by commercial firms during the past weeks. Why this is a US indicator? It most affects the CAD due to Canada's sizable energy sector. It's the primary gauge of supply and demand imbalances in the crude oil markets, which can lead to change in production levels. Crude oil inventory is another. For those that always trade oil, you need to be watching out for news like this, because it moves, the oil instruments. Also, it moves CAD, because CAD energy is their major source of income, Canada. All right. So when oil power is down, it affects them, and when it's high, it also affects them. And when it affects Canada, what does that tell you? It tells you that every instrument that is paired against Canada is affected in a way. So crude oil inventory is one of those, instruments you look out for while trying to trade fundamentally. Trade balance is also one of the instruments to look out for, while trying to trade fundamentally. Non-farm payroll and other employment data. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. The non-farm payroll is the in the USA, for example, which measures change in the number of employed people during the previous month. excluding the farming industry, is one of the most significant fundamental events in the, GFM. In one of the most significant in GSM, other employment data around developed countries that we can take advantage of includes employment rates, employment change. Now, non-farm payroll is one of those major, news everybody look out for. If you know of non-farm payroll, if you are a lover of fundamental, I love fundamental, I love trading fundamental. So if non-farm payroll is coming out, my brother, if I don't have money, I go to source for money just to trade this particular news, because this particular news moves market like hell. Because of course, this is one of the indicator the US use in knowing if their economy is doing well or not. Because if there's job all over the country, what does that tell you? People will be able to spend well. And when people spend well, producers will be able to produce well because people can buy and patronize them. And when people patronize them, what happens? People will be taxed because people are working. So looking at it, whichever way you want to look at it, job creation, is one of the major factor to determine an economic growth. So this is what the US use in measuring, a change in the number of employed people during the previous month. If last month the employed people were about 600,000, this month they are going to check the data and statistics to know, have they improved? Have they increased from 600 people to 700? If they increase from 600 to 700, it is good for the country. It means that USA has been doing well in terms of giving employment to people, and which means that is affecting their reserve capital, because the more people when people work more, people tend to pay more tax, people tend to patronize the production of that country. So it's like garbage in, garbage out. You work, you buy, this one collect the money and go to produce and produce more, and like that, and people can buy more and like that. Do you understand? So that is one. NFP is a very, 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 very important. And trust me, when it comes to US, USA, is one major player in the financial market. All right. So it's always a news people watch and wait for. All right. So we call it a day for today. I'll be waiting for questions. Okay, I think I have a few questions there. Okay, someone is asking, someone is asking, when placing trade on pending order, at buy and sell, what become of order if the trade go either of the buy or sell? Okay, if you place a buy or a sell and the trade goes up, that means the trade has not come down now, it only went up. So it's the one that the buy trade that will trigger. And so when the buy trade triggers, it goes and it triggers. And remember, this market is a dynamic market. It's like a real life situation. Nothing goes up and never comes down. What goes up will always come down. What goes around comes around. So when it goes up, it will always come down. Markets that goes up will always come down. Note this. So for those people that are always in a rush to end trade, when the market goes up, it's going up, it will always come down. The only reason why you are in a rush to end the trade is because you don't have enough capital to keep the market going, which we clearly understand. But with that market come down, it will come down. So that your sell position that is there, the market will always come down to meet it. And then it will trigger it and then take your profit perhaps. I don't know if that answers your question. And please, how and where do I access all this? Okay, you can access this information via investing.com and Forex Factory. Investing.com is a place where you read about traders, you read about, countries, all these things. Investing.com. Investing.com. You can ask your account manager. You can the account manager can share the link to you. Not link, is a site, investing.com. If you just type it on your Google or your browser, investing.com, it will give you. You open it, you will see different stuff to read about. You want to ask news on gold and various indices. I don't understand. News. Hey, if you want to get news on gold and various indices, you go to investing.com, and Forex Factory will also tell you how you can the major news that are coming out. And then we've just talked about how you can get to interpret this news and apply them. All right. Please use tomorrow's 7:30 news as example to explain how news affects the markets. First of all, I need to know what news is coming out tomorrow. I just explained how news will affect markets. I don't know if you were in this class early, Mr. Emmanuel. If the news comes out, you look at the zone the news is coming out. If it's coming out in the US zone, okay, you open that orange box. The orange box will tell you a lot about that news, how that news affects that country, and why that news is always expected. And then it will go ahead to tell you what is expected of the news. If actual is greater than forecast, if it will be good for currency or not. So the news may tell you that actual greater than forecast is good for currency. Open that, go to forexfactory.com, then open any news you see. On that news, you see that orange box, open it. We looked at this thing earlier. So it will tell you if actual is greater than forecast and if it's good for currency or not. And so when the news comes out, if the statistics or the data, the actual is greater than forecast, if it's good, you see it will come out as green. If it's bad, it will come out as red. Then you'll be able to know the decision to make. And that is dependent on the instrument you are taking. How is it best to trade news releases? We discussed this before, after, and during. And we also talked about how you trade it before it you set a pending order. We talked about during the news, when the news comes out. When the news comes out, you know how to trade. And after the news, sometimes the market retraces, you see how to trade it. When the market retraces, you follow the trade. Why is it that indices don't obey fundamentals? Who says indices don't obey fundamentals? Indices obey fundamentals. Why? Indices actually obey fundamentals. Indices obey fundamentals, and it obeys fundamentals very well, especially that US 100. Indices obey fundamentals. Please, do we have to wait for the actual report before trading? We said this now. You can wait for it, you can trade before then, and you can trade after then. It depends on you. Okay, some of this news, like we say, you need to look at it technically. Some of this news, when it comes, it's just once. The market just spike like that, and then it doesn't retrace. Some, when it spikes like that, it retraces after like 10 to 30 minutes. So it depends on the news. So you have to look at the news technically. How has this news reacted? You can consult your account manager to explain better to you, to know how does this news react. Okay, is it the type of news that when it comes out after 30 minutes or after 1 hour, it will start retracing? Or is it that news that when it just comes out like that once, you don't get to trace the effect of the news again as though? This is Elliot. Thank you very much. Okay. Your class is very interesting. Okay, well, thank you very much. Sometimes, who is the founder of Forex? My brother, Mr. Babon Consiam. Actually, Forex has been existing for a very long time, but it wasn't this known. Okay, it was based on exchange. Remember, Forex is just the exchange of one currency, of and the other. If I give you Naira now that I want to buy dollar, okay, remember, no currency has the same rates. Every currency in the world have different rates. So if I give you Naira now that I want to buy currency, I want to buy dollar, dollar is black market now is 700 and something per dollar and per naira. Will there be change? There will be change. So that difference is what you are trading. So we have been exchanging currency right from time being, but it wasn't this way. All right. Everything just became so advanced, and digitalized now. We are now trading it online. Before now, our father used to buy shares. They'll buy it and they'll write, they'll give them, shares, and they'll give them certificates. They'll put them in paper. Our fathers will come and put it in our box and keep it. Do you understand? And when it's time for them to sell, they'll go and remove the thing and go to stock exchange market and go and sell it. That was manual. Everything is now digitalized, which means this thing has been existing. The buying and selling of stock has been existing. The buying or selling of cash has been existing. Now, remember, my mom used to buy gold. She will buy gold, jewelries, and keep. I didn't know the reason why she used to buy that jewelries and keep. One day she bought that jewelries and then she took those jewelries and went to sell them and came back with enough money. It was when I grew up and now realized that, so this woman then used to buy these jewelries just to save her money. Do you understand? If you notice, people that buys original tiny gold or original jewelries now, if you sell that jewelries in the next 1 month, 3 months, next year, you will more or less get that same amount you bought that jewelries. Because gold or jewelries, all this gold and silver, the original, you hardly see them depreciate in value. And that is why in forex market, we call gold a safe haven. It is the best place you can take your money, buy, purchase gold and keep. In the next 1 year, go and sell that gold, you will still get, the same value or even more value than what you invested in that gold by buying it. So gold also, commodity also were sold. So all these things were happening back then. It's just that it was not digitalized like it is now. If you miss the class because of the network, okay, I think you go to our YouTube page, our YouTube channel, you can get to, get a revised of this class, a repeat of this class there. A recorded version will be there. You can go there. This lecture is very rich, okay? I'll need it for thorough learning. Please, is it possible to get? I guess that's what, yeah, it's possible. I just said it. Go to our YouTube page, you'll get it there. Sometimes US30 will buy and 100 will sell. The reason why US30 will buy 100 will sell is because, yes, they are all indices, under indices, but US 100 is part of it. US 100 is mostly made up of tech companies. You see more of tech companies in US 100, but you don't see them in US 30. That is why you will see US 30, US 100 will be doing one, and sometimes US 30 will be doing that. Remember, we said it earlier that some other factors affect some instruments from taking the direction that you probably may want to take. Okay, I analyzed something about Apple that actually released their earnings yesterday. Okay, you see US 100, if the earnings was good, you see US 100 doing more buy because you have more of the tech companies in US 100 and you don't have them in US 30. I hope that answers your question. If trade on pending order or buy triggers immediately and reverse against the order, what become of the trade and the trader's chance of the trade? Anyways, that's why you have, that's called, it will trigger it and it will come back, that's called in a way fake out, and then that's why you have your stop loss. Okay, now you have your stop loss because you probably will not be with the trade to see how the trade reacts. By adventure, it triggers and it doesn't get to your take profit. Most times it doesn't get to your take profit and it will reverse. Okay, now you have stop loss to stop your trade. For those who don't use stop loss, practically I don't use stop loss. That's because I can watch my trade and I know when to take my loss and I know what loss I can absorb. Okay, basically there's nothing else you can do. That's because the thing did not get, the market did not, the market triggered and it didn't get to your take profit. Okay, that's also maybe you didn't analyze it well to know that this market may not get to that take profit. Okay, sometimes you analyze it well, but because the market is dynamic, it just did not get there. All right, so that's why you have take profit to cut your loss when it's going beyond what you can take. They don't go the same direction. I don't understand that. Please, you guys give beginners clients like us trading hints. Yes, we do give trading hints every day. Meet your account manager. If you funded your account, your account manager will always, please, your YouTube name. Okay. Would your, please, your email, please. In fact, your account manager will drop this for you. I'm not traded. I've not traded for more than a week now because I'm still trying to understand everything without making lots of loss. Okay, you've not traded. Why you don't? At least you should be trading with your demo, even if you are not trading with your real account. You need to trade with your demo. Trading is more of practical. If you are learning and learning, you don't trade, you don't practicalize it, you are not going to get it. So trade with your demo and understand. Okay. You that want Mr. Uzo, please drop your email. And your account managers are going to actually send this the YouTube channel to you, and go to our website. You see the YouTube channel there too. Disabled what? Our money instructor said we should sell gold this morning, but gold has been buying since then. Well, unfortunately, gold has been buying. Like I said, nobody owns the market. The market is a two-headed sword. So if you are on a buy, on a sell, if you're on a sell and gold has been buying, then look at your loss. If it's a loss you can accommodate, then end it. But if gold has been buying, selling since morning, that means that gold is almost as possibly oversold. So what you should be expecting now is a retracement. So which means if gold has been selling, then you should wait, because this time is the time that gold will start buying. Remember I said earlier, market will always retrace. No market goes in one direction forever. Do you get? So if you've been on that trade since morning, like you said, then wait, the market will always retrace, and then your loss will turn to buy profit. So just type rally trade on your YouTube. Rally trade, Mr. Yeah, no, okay. I've seen your this thing. Just type rally trade, right? Just type rally trade. I want to ask, why does those trades against each other? I really don't understand, why do they trade against each other? Because as you are buying, other people are selling in the market. All right. So it's not really you in the market. Other people are buying. Some people are making an attempt to buy. So it's the highest person that takes the market. So that's why they trade against each other, if maybe that's your question. So thank you very much. I think I've been able to answer most questions. So if you have further questions, please consult your account manager, and then they are going to throw more light on your question or your request. Thank you very much. I appreciate the kind gesture. All right, thank you. We'll see you tomorrow. We'll see you tomorrow, no, on Monday, on Tuesday. All right. So if you know you've not funded your account, or if you know you are having little balance in your account, please, NFP is coming up, tomorrow. NFP, remember I talked about NFP, non-farm payroll. Please fund your account and trade it tomorrow. All right. Even if it's 5,000 you are making. All right. And we are going live by 2 p.m. tomorrow and help people trade and trade with you. We don't help you trade. We'll be live tomorrow and we'll trade with you. Even if it's 5,000, 3,000, just make money tomorrow. Make money tomorrow. People are making money. You should make money. Make money tomorrow. And God bless you. Have a lovely day and have a lovely evening.